Welcome to the Fear and Greed Business Interview. I'm Adam Lang. Last week, chipmaker Nvidia recorded the biggest ever one-day drop in market value, losing US $279 billion in a single session. That plunge came after Nvidia's second quarter results the previous week, results that generally met or exceeded expectations. Nvidia is, of course, the poster child for the AI boom, so any wariness or uncertainty from analysts and investors has the potential for far-reaching consequences. I wanted to take a closer look at what's happening with Nvidia and some of the other companies riding that AI wave, including a few on the local bourse. Remember that this is general information only, and you should seek professional advice before making any investment decisions. I'm very pleased to say that Josh Gilbert is here with me today. He's a market analyst at social investment network eToro and a regular guest on this podcast. Josh, welcome back to Fear and Greed.
Thanks for having me back, Adam. Great to be here.
Before we get to Nvidia specifically, you've been keeping a close eye on the US reporting season. How have you seen it?
Yeah, look, overall, it's been I think a good season. We saw 11% earnings growth, which was sort of well above estimates, and we weren't really expecting to see double-digit earnings growth until next quarter. So the fact that we're seeing a little bit earlier was fantastic. We were expecting around about 8.5% earnings growth, got to that double digits, highest earnings growth since 2021. Utilities, tech, financials, healthcare, all leaders. But I think really what was the standout for us is that we sort of relied a little bit less on tech this quarter. We're starting to see earnings growth broadening out a little bit. And for a while there was a big worry for investors that tech was obviously the big driver behind this market. And if we saw that slowdown, the market wouldn't sort of continue its rally that we've seen. And we are starting to see that broaden, which is vastly positive. And I think, to take away, we've got obviously, which looks like almost a certain rate cut coming from the Fed in September. We've still got strong, decent global growth as well. And those earnings numbers that we got from the US tells us that the bull market still has more legs in our eyes.
Oh, that's great to hear. Nvidia aside, what were the standout companies for you?
Yeah, look, I think, as you say, we focus on tech. We look at tech. Those were sort of some of the names we always tend to look to, that Magnificent Seven. Utilities companies, as I mentioned there, they saw the highest earnings growth in the US. So they were probably the standout sector. We really look to some of those other big tech names like Meta, Alphabet, I think that came through with some really decent numbers on the cloud side as well, showing that it's not just Nvidia doing the heavy lifting. Some of these other names are sort of really coming through. And in the travel sector as well, I like to sort of keep an eye on that sector. And the likes of Airbnb posted some really strong numbers in Q2 as well. I think we're sort of continuing to see that revenge travel after the COVID pandemic. And I think that's a great business that, has a long runway ahead as well.
Were there any disappointments that you'd speak of?
Look, I think broadly, we look to probably the materials and the energy sectors. Those were sort of two of the sectors that sort of really struggled. I think we saw that a little bit on our local market. Again, a lot of that coming from commodity prices, which, have been in decline over the last sort of 12 to 18 months. We're not sort of seeing the same sort of record profits that we saw from these companies in sort of previous years. And I think that's really sort of making it difficult for a lot of those businesses to continue, paying the dividends. We saw BHP cut its dividend just recently as well. So I think that's sort of really difficult for a lot of those companies to continue to sort of stand out. Tesla was probably one that maybe disappointed going into it. We've had some difficulties at the sort of the start of the year. And, I think that the company is really sort of looking to try and, reinvent itself at the moment into maybe a bit of an AI play, a bit of a tech company and not just an EV manufacturer. So that was, I think, one name that sort of stood out.
Stay with me, Josh. We'll be back in a minute. I'm speaking to Josh Gilbert from eToro. Now, Josh, on to Nvidia. The chipmaker's results were a really strong set of numbers in my view, but investors seem to react badly. Are they just too accustomed to being blown away?
Yeah, I think basically that's it. Before we sort of got the result, The stock was branded the most important stock on the planet. So I think that tells us everything.
Yeah, no pressure.
Yeah, I think that tells you everything you need to know about going into the result. But look, it was a great result. Revenue up by 122% year over year. Huge jump in data center revenue as well. Profit more than doubled to about 16 billion. So, really, really great numbers. Announced a $50 billion buyback. I think that signals, its own confidence in sort of what's ahead as well. Finished the quarter on a huge balance sheet, around about $35 billion as well. And its outlook even beat expectations as well. And so when we're talking about that, to then talk about the stock falling, you're thinking, okay, where is that coming from? But I think, as you say, the market might have been slightly disappointed not to see what was basically a bigger beat on its guidance, given essentially we've got some basically unattainable, what it feels like, expectations from some analysts and some investors. But I think the bottom line is that the long-term story remains intact. Demand remains huge. And I think that Nvidia will keep rolling on.
Yeah, look, I agree with that, Josh. And just to look at the second sell-off last week, and its stages got even bigger. What do you think caused that? I saw there were a couple of analysts raising questions, including about the strength of demand for AI outside the tech industry. Was that enough to concern investors?
I think there's a couple of things. So we kind of had that sort of coming in, this AI demand thesis. Is it going to stick? Is it going to continue at the same level that we've seen in the past? Then obviously right at the start of the week, we had those sort of recession jitters. We had some pretty weak manufacturing data that came through. And that macro environment at the moment is very sensitive, very sensitive. If we get sort of slightly weaker numbers in even, like you say, some data that we wouldn't probably really put a lot of focus on, such as manufacturing numbers, it really hit the S&P 500 and NASDAQ very hard at the start of the week, and Nvidia felt the full force of that, coupled in with this idea that that they are sort of on the watch list of the DOJ as well, a subpoena potentially coming through. So all of that coming through, I think, had a big effect. But I think, in my view, was a bit of an overreaction. I think investors are going to see any weakness as opportunity. I think if we look at the sales projections for the current period, I think, again, above expectations. I think that disappointed some investors. But when the stock has had a huge run, it's had a massive run. It's one of the best performing companies, in the US. It's easy to sort of try and poke holes and try and find something and the smallest thing that isn't wrong. And I think that's what investors are doing. When you're branded as magnificent, you've sort of kind of got to be perfect. But I think the market's clutching at straws a little bit. I think it was a fantastic result. I think the sell-off is a little bit overdone. And as I say, I think investors will see any sell-off as an opportunity.
Josh, I guess the strength of AI itself, outside Nvidia and people's being concerned or even spooked about what the future is like for AI, my own view of this is we're only just getting our heads around what sort of tool it is and how to apply it in different companies and industries. Do you think the real world demand for AI products is going to live up to the hype?
No, I think absolutely. I think there are use cases in AI for so many industries, and you speak to people now, and it's hard to imagine how they did certain processes without AI. If I just look at sort of my business itself at eToro, we're integrating it in so many different areas of the business, in our search tools, in helping investors, manage their portfolios, how to diversify. It's, through our customer service areas. So there's so many ways that I think it can be integrated into businesses. It improves productivity. It's going to help companies' bottom lines. And I think that is the key point. It is going to help these companies' bottom lines. And that's why they are investing so heavily into it. I think there's a $1 trillion opportunity with AI. There's no doubt about that. There will be companies that benefit from the spending and then the technology itself. And I mentioned about my business. We can even look locally as well. A company like Domain, sort of a real estate platform. And recently they said in their sort of release that they've improved 1.5 million listings on its app by integrating AI. And that is massive. And it just shows how this technology can improve a business and so many different businesses. So I think it has so many real world use cases. And I think, to be honest, we're just getting started.
So what about a little more information on the local scene? You've mentioned Domain there. There's a lot of attention on data centers following last week's news about the $23 billion sale of data center company AirTrunk to Blackstone. What are you making of other players in this space like NextDC or Megaport?
Yeah, well, that was a huge deal. And I think it just goes to show the opportunity that's available in AI, not just obviously in Nvidia, but also not just in the US as well. There's clearly a lot of opportunities locally here. Look, I think it's fair to say that there isn't a huge amount of choice when it comes to tech on the local market. We're very financially heavy. We're very resource heavy. So when we look to tech, most often investors will go to the US, but there are options here, no doubt. AI is being implemented across a lot of businesses, but there are companies here that are benefiting. You mentioned there NextDC, Megaport. You can even look at Goodman Group as well. Previously known as that sort of industrial real estate business, but is now very heavy into the sort of the data center side of the market, and is benefiting massively from that. One of the biggest companies now listed on the ASX. You look at NextDC, they're increasingly involved with sort of supporting AI workloads, providing the sort of the high performance infrastructure needed for AI applications. And even if we just look outside of that, if we then look to other companies that are set to benefit, we can think about the energy providers, AGL, Origin, these types of companies. We are going to need so much power to drive this computing power over the years ahead, and that's going to benefit a lot of companies. And even some of the miners, right? We're going to need copper. Copper is going to be key in the sort of the electrification of this sort of renewable push in the future. So there's so many sort of ways I think that we can look at AI. You mentioned Megaport there earlier. Megaport is a business that I think is really exciting. It sort of kind of joins businesses together, cloud services, service providers, data centers. It sort of it's a digital bridge essentially, instead of companies sort of building separate bridges to different cloud providers or data centers. Megaport is that sort of single platform that sort of brings everything together and makes it cost effective for businesses. So again, plenty of opportunities on the local market, and there are a lot of companies that are going to benefit, as I say, bottom line wise, from companies spending more money, and there will be companies that benefit from actually just using AI in their day-to-day businesses that will, as I say, make them more productive and ultimately make them more profitable at the same time.
Josh, you know what I love about some of those companies you mentioned? AirTrunk, NextDC, Megaport, such great names.
Yeah, they are. Yeah, they're not exactly very basic names, are they? And it makes a difference for hearing Woolworths or Coles that we sort of tend to think about on the local market. So yeah, no, they have got nice names. I agree.
I think it's a really exciting time, and thank you for talking to Fear and Greed.
My pleasure. Thanks for having me.
That was Josh Gilbert, market analyst at social investment network eToro. This is the Fear and Greed business interview. Remember, this is general information only, and you should seek professional advice before making investment decisions. Join us every morning for the full episode of Fear and Greed. It's daily business news for people who make their own decisions. I'm Adam Lang. Enjoy your day.